But more than likely, if he cuts, they were raising, I think, from like 25 basis points to 50 basis points, which is basis points is like percent, like 0.25% or 0.50%. They're raising little by little. So they'll likely start doing the same, cutting little by little, unless like the market just tanks one day or something. Then they might think about, they might do stronger rate cuts because they're concerned the economy might crash. But this is the first time that he's kind of clearly said that like we're gonna begin basically a rate cutting cycle. Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over week 5 of our weekly numbers. So every week we go over our portfolio, our ROI or return on investment, and we're going to go over our portfolio and our staking for ILV token. So this is going to be week 5. Today's date, August 24. So this is currently our portfolio's net worth, $130.50 as of today, 8/24, time of this filming. Remember, every week we auto deposit $10 into our trading account, and at every $25, the money gets auto deposited into our portfolio and it gets distributed based on how we set up our percentages for our 6 different ETFs. So currently, this is our week 5 portfolio return. As you can see in the lower right area right here, we're at 0.49. Ignore that. We're at 0.49% increase. So you'll see a divergence here, kind of a drop and then a raise towards the end of the week. So this is going Wednesday, Thursday into Friday. As you see, no new net cash flow, and we have a market gain of 0.74 cents. So again, up 0.49% in 1 week. And now, since we're a month into our portfolio, we can now look at our monthly data. So we have our weekly data, and now we can start looking at our monthly data. So you see this large spike in here. This is about a 30% increase in our price from $100. You see to the left here, goes up, then it goes about to $130, so about 30% increase. That's just from the deposit. That has nothing to do with our portfolio growth in terms of performance. So if you look down here, our money rate of return is only 1.20%. So it's not like 30% because we auto deposited $30. Down here, the 1.2% is based on our trading activity. So we're positive 1.2% for our trading. Our market gain for the month is 1.31. So now I can show every week the weekly and monthly return. And then when we get to kind of that third month, then I could show weekly, monthly, and quarterly returns. So we can kind of see over a longer time horizon, different time frames, how our portfolio is performing. So again, this is our weekly return. So this is a week. This is just a 1 week chart, so 0.49%. And this is a monthly, 1.20%. So this is our weekly percentages. So we're actually flat on gold at 0%. No change in gold. Still at 30% of our portfolio, our largest holding. Bonds were up 0.59% in our portfolio, or 19 cents. And we're still at that 25% rating for bonds. Based on the Federal Reserve's meeting recently at Jackson Hole, they're talking about possibly lowering rates. So we may see this change, go up or down. We don't know yet. But if interest rates go down, bonds could have a positive effect to go up. We don't know yet, but we're going to watch for that. Our US dollar down 1.54%, you see here. And then we're still having at a 20% allocation in our portfolio. Now, if the Federal Reserve does lower rates, I may lower this. Actually, with the performance we've been having, I may lower it sooner than that. We might break it down to 15%. We'll see. I might add the 5% to bonds, possibly. Our stocks were up 2.13%, and we still have that at a 10% weighting. Our commodities were up 1.62%, and we have that at a 10% weighting. And our Bitcoin were up 6.42%, and we have that as a 5% weighting. So now we can also look at our monthly percentages as well. So now we have our monthly percentages for week 5. So gold for the month is up 4.28%. or $1.41. Still at 30% weighting. All these weightings are going to be the same right here that we just saw. So gold 4.28%, bonds up 2.16% or 51 cents, dollar down 3.27% or 0.73 cents. And this is why I'm considering reducing the position, because it's kind of been going down. Now this is over a month it's been going down. Stocks up 3.71% or 41 cents. Commodities down 2.71% or 41 cents. And remember, we did reduce this. This used to be higher in our portfolio. We reduced it down to 10%. So that's the reason why it's just been going down. And Bitcoin, although on a weekly, it's up 6.42%. On a monthly chart, monthly trading, it's only up 2.57, so a smaller amount. So it's been a lot of volatility. That's up 14 cents. So that's our monthly percentages. I have no transactions this week, so we're not going to see anything there. Illuvium staking, week 5. As you see over to the left here, I now have 2.11 ILV staked. So once a month, I'm going to increase our vested illuvium by $40. So every week of our main portfolio, for our stock portfolio, we just add $10. It's about $40 a month. So I'm going to do once a month illuvium staking, adding $40 just to kind of even it out, so they're both kind of rising together. So our current market value as of today is $50.01 illuvium price. So total with our 2.11 ILV tokens, we have $105.63. You can see over here the revenue distribution is now 0 because I claimed the revenue distribution we talked about that we got last week, and I added it to our staking pools. And you'll see that in a second. So this is now 0. So every time I get a claim, or every time I get a payment, I'm going to claim it and add it to our monthly deposit of ILV token and stake it. So you'll see that. So prior weeks, we only had one of these vesting. Now we have 2. We have the second one we just added today, which is August 24th, which is today. So the first one, which we locked in July 27th, 2024, it will unlock in 337 days. And then the one we locked today, August 24th, it will unlock in 364 days. So the first one at the time, we put in 1.32 ILV token that we staked. It was about $100 at the time. And then today's, we put about $40 of ILV token, which comes out to 0.79 ILV. We did the same source as a deposit, same weighting. Weighting of 2, because if you do a full year, you get double the rewards. That's why you get times 2. So we want to do the same thing. So you'll see more of these every month. Basically, you'll see this one this month, you'll see another one, or last month, then you see this one this month, then you'll see another one next month. We'll add more and more over time. We're doing it basically once a month. So again, our revenue distribution is at 0. So we had 0.0053 ILV as a payment. That was our ILV token we got paid out. So again, we claimed it, and then we added it to our $40 deposit that we staked. So whenever we get a revenue distribution, we're going to take it, we're going to claim it, and then we're going to deposit it so we can earn higher rewards. So rather than cash it out, we want to continue staking it so we can earn more revenue. So these are our transactions. I messed that up. So we have the 0.0053 right here received. So this was our staking rewards. This is our revenue distribution right here. This is what we received. And then the 0.78 is what I bought $40 worth today. So that happened early this morning. And then I staked that. And then 1.39, this is the previous month. You see July 27th. So this is what we bought basically today. And then we claimed our revenue distribution today. And then we staked it. So that's our weekly numbers. So now we'll go over our charts as we do. So I start with gold because it's our biggest position. I'll just extend up these bars. On Friday, it was up 1.16%. So you see this uptrend still going all the way back to October 2023. Just in this still big uptrend, still doing very strong, still very positive. I don't foresee in the near future us changing this unless it starts breaking down then we'd have to reduce our position. But it's been at 30%. It's been holding. Government bonds, you see, we were in this wedge pattern, and then it broke out on July 30th about, and then it broke out, and then it kind of keeps going up. So this is why we increased our government bond position. So we're at 25%, and on Friday it was up 0.34%. So we increased our bond position because it's been going out, and now with interest rates possibly coming down per the Federal Reserve's commentary, this may increase. We're going to watch and see. Usually interest rates and bonds are inverse of one another. So when interest rates go up, bonds will go down, or if interest rates go down, bonds will go up. So we're going to see. Our US dollar index also in this wedge pattern, it broke down. So it's really breaking down hard here. So this is why I'm considering, lowering the position. And also with interest rates lowering, this may weaken the US dollar. Again, we're going to see. We don't know for certain, but we're watching for it. So I think I'm going to reduce from 20% down to 15% possibly, because I'm still not as optimistic on the stock market. So I want to put this probably into bonds, because I think we are going to have that rotation where bonds are going to keep going up like you see here. Now, if you look on the 5-year chart on bonds, remember we came down a lot. This was this peak in about April of 2020, and it came down a lot, came down a long way. So now it looks like we may be at this bottoming here, and then we're breaking out, we're coming up. So we're going to see if that's the case. Pardon me. We have our commodities. Let me do a 1-year chart here. So it broke down, and then it's kind of going a little sideways. So remember, we reduced this down. It's up 1.47% on Friday, but it was coming up since December of 23. Did really good, and then right around July 29th, it started coming down. So that's what we reduced our position. And the reason why I'm slower to come out of dollars versus commodities is our dollar index is less volatile, so it doesn't move as much. So even though it's coming down, it doesn't hit my portfolio as hard as commodities do. Commodities are a little more volatile. We have our equal weight stock market index, the S&P 500 equal weight. You see where it fell down here August 5th, and then coming back up August 15th, coming back up into our trend. So we still have that at 10%, because like I said, I'm still not too optimistic on stocks. On a 5-year chart, we kind of been going sideways. We kind of peaked on January 22, and it's really only just started coming right up around this area again, 2 years later, more than 2 years later, probably like 2.5 years later, I would say. But right now we're just kind of watching it. Typically in the past, when the Federal Reserve is in a rate hiking cycle, and then at some point they reach a peak and they start dropping, typically the stock market will drop as rates rise, especially if they rise rapidly. We don't know if that's going to happen, but just in the past we've seen that before. So we're just watching to see. And of course we have our Bitcoin. If on a 1-year chart, remember going back from October 23, we had this great uptrend, and then it broke down really hard from June 24, came down to July 24, and started coming up, and then August 24 come down again. So it's kind of just hit up and break down, came up and break down, starting to come back up a little bit again, but we don't know what's going to happen. So we're just watching each of these play out. So just super quick, just to kind of cover what I was talking about. So this is the Washington Post article here. Fed Chair Powell, and this is his quote: "The time has come for interest rate cuts." So Jerome Powell's speech in Jackson Hole, Wyoming means rates will probably fall at the central bank's mid-September meeting, but he didn't say by how much. Now, we don't know definitively if it's going to be the first cut in September. One thing many people have pointed out, which I kind of agree with, it is an election season. So it may seem as like a political move. I'm not saying that it is, but it could be perceived that way. But more than likely, if he cuts, they were raising, I think, from like 25 basis points to 50 basis points, which is basis points is like percent, like 0.25% or 0.50%. They were raising little by little. So they'll likely start doing the same, cutting little by little. Unless like the market just tanks one day or something, then they might think about, they might do stronger rate cuts because they're concerned the economy might crash. But this is the first time that he's kind of clearly said that like we're gonna begin basically a rate cutting cycle. So this is why I'm thinking of increasing my bond position a little more, just to see if I can get that negative correlation where interest rates dropping and bond prices rising. So that'll be good for our GOVT ETF, which is our bonds ETF. So again, we don't know what's going to happen. We're going to watch and see. Every week, do these numbers and go over it. Likely next week you'll see a rebalance change. So I said I'm still thinking about it, but possibly reducing our UUP ETF, which is our dollar ETF, bring that down from 20% to 15%, and likely taking that 5% and putting it into our GOVT ETF, which is our bond ETF. So that'll bring that up to 30%. So that means potentially both gold and bonds will each be at 30%, comprising 60% of our entire portfolio. So there'll be more risk averse kind of assets. So we'll see how it goes. For sure, I'll make a decision before Monday and I'll go with it. And then the following week, you'll see the new numbers. So hopefully this was helpful. As always, send me your comments, questions, criticisms, anything at all. And thank you for watching, and I'll see you again.